Weekend all. I'm Epstein with your weekend edition of your metal market wrap-up. And this wrap-up is for Friday, and we're at the 24th of November. It's hard to believe we'll be in 2024 shortly, but we're here right now. Hope you all had a great Thanksgiving. I did. I got back, I drove home from Indiana last night. It was so easy. I mean, I don't know if I saw 30 cars on the road until I got to Chicago. And I was only, I don't know if I was 45 miles away, 50 miles away. In the city, it was crowded. And so that held me up, but the flying time on the highways was unbelievable. I don't know where the police were because people were going crazy. And it was interesting. Nice to be home. We're going to get our first cold weather bat. Yep, they're talking maybe snow Sunday morning, so that should be very interesting. But then it's going to warm up again into the 40s. But we're at that point. Winter's more than welcome. All the leaves are off the trees already, and the skies are ugly. You don't want to visit now. Hear me? You don't want to visit. Okay. So in the metal market, you know, one of the things that's happened is gold, and I have said this to you for a few weeks now, you have removed two of the headwinds of gold. You don't have a strong dollar. You're back into the 103. You're not pushing 108, 110. You're 103. And there's talk that interest rates are going to be in the next moves falling, not going up. That's the other headwind. Now, you're not getting quite the inflation play out of the energy market because OPEC is really fighting amongst themselves as to how they're going to put a further production cut in or extend what they have. I don't know how that's going to work out. I talk about it in the financial market update. I'm not going to repeat it here. But what I am going to repeat here, and I think it's important, is every year at this time, I offer you an opportunity, and it's to get my charting courses for free. I'm redoing the full charting course right now. If that's the one you choose, please don't you take the old one. I'll have the new one done either in 4 weeks or 8 weeks. It's phenomenal. I'm far along in it. I'm going to work all day tomorrow, and I'll be through the next big chapter. And after that, they get easy. So I'll be flying. The course is the best one I've ever done. It will keep separate in it the enhanced Bollinger Band course. That'll be separate, and the outside days. So I'll allude to what they are, but I'm not going to teach the way I do in the separate courses. Now, what do I mean by you can get this for free? So let me explain how this all works. And behind me, I'll just let this run. We have 4 different types of yearly subscriptions to my research. The full research, where you get the futures and my twice daily written updates, and the special intraday updates, and there's quite a few of them. Then you can choose of getting my, by standing alone, the futures market subscription video. It comes out Monday through Friday morning, about 5:15 in the morning I record it, cover all the futures markets for you. At 9 o'clock each morning, I come in and I do a Spider ETF market. That's another one you can get, and you can go for a combo of the two together. In just about every case, what you're going to get is worth more money than what you're buying. I mean, I think you'll find this to be an awful lot of information. I think you'll find that each year, the results that we've done, we work hard at. We learn. We go. As I learn new things, I explain them as we work with it. Will every trade be a winner? It's a guarantee. No, they will not. That's the guarantee. There will be losers. There will be winners. All right. You will see both. But the idea here is I'm giving you trade ideas. In each of the videos in the morning, I follow through with what I said the day before, and we track it. The written updates, the written ones, pick up what I also said in the morning and bring them in, and we give it to you. I don't publish a running track record. I publish a track record of the running open orders that I'm telling you to do. I don't want to be a commodity trading advisor or your trading advisor. I am not looking to manage your money. I am looking to enhance your trading. We are a brokerage firm. I have brokers you can work with here. You can place your orders through us by yourself, work with them. They are versed in everything that I do, and they call me if they have questions about it. So how do you do it? You can either call them and talk to them. They're there Monday. They'll be in the office 7:30 talking to you. Just give them a call. You can click up here. There'll be an icon if you move your cursor there. Or if you're watching me on YouTube, you can give a click on the top right. You'll see the link. That'll get you there. This is going to end soon. The deal is you can get any of these, you can give it away. You don't have to take it yourself. Let's assume that you want to move up in your own subscription. You go, I've taken these courses. I'd like to give one away, then I get it for free. Absolutely. We will work with you. It'll be a gift, and we will tell the person you're getting it. It's from you, blah, blah, blah. Guys, it's a heck of a lot better than a sweater or a pair of socks. Gals, a lot better than that too. All right. So that's where we're at. So let's go back to the marketplace and take a look. All right. So in the gold market, well, we are at the high of this whole move. This is bullish action. It doesn't feel like it because it's not running to 2050 and things of that nature. But you are here. You've removed an awful big piece. You have a pattern on a closing, if you think about it, higher lows and higher highs on the chart. The action here, you could call this an inverted head and shoulder. Think of this as a head that's pointing down. You got your head straight down. A shoulder. If you pick this up and flip it, let's call this the 2003 level and this 1800. It's a $200 level. It would point in long term to $2,200 if that happens. What violates this is obviously taking out this shoulder. So we watch, we pay attention to it. I get a lot of you that say, do I look at this chart pattern, that? Some I do, some I don't, all right? I look at different things that I have found that for me have worked over the years. I'm not saying that there aren't things, there are chart patterns that are better than the ones I'm studying, but you can teach me. And by the way, you can teach me, point me to the things and I will do it. I'll do a review and say, I like it, I don't like it. Higher high, lower low. Nothing there to do on the weekly chart. Your support's evident as can be. I mean, how much clearer can it be? 1935 is the support. The bias is up in the chart. All the resistance of moving averages are below you. The next goal is 2029, the upper Bollinger Band, and that'll probably climb a little bit this week. And you're overbought. Overbought. So does that get my attention here that I'm telling my clients go out and buy? Well, why don't you become one of my subscribers and you'll find out. The gold-silver ratio, you're right back underneath. So when you come down like this, number one, I should cover this in silver. I blew it, all right? And I will. I forgot to do it. And that's because you want to own silver over gold right now. And when you look at silver, it doesn't look a lot different than gold. It's the ratio that's there. You have a lower low, higher high. The bias is up. Your upper Bollinger's there. And you have momentum up. Unlike the gold, you're not overbought, but that's what I'm seeing. Copper's friendly. Copper's running at a deficit every year. Why did copper come alive? Two reasons. Number one, China is trying to do something in their property market. I've been talking to you about it all the way through. Number two, if interest rates fall, there will be demand for goods, lots of goods that use copper, durable goods. I can go on and on. Infrastructure plays. You're not there yet. You're forming a bottom. I don't know that you're ready to run to the upside. Could I make an argument to get back to 390? Yes, but it will take something big out of China. It's not going to be the interest rate play just yet because all that we're going to get out of that is we're going to be in a stall for a bit. If inflation picks up, copper comes down because the banks will raise rates. But if inflation just keeps gradually working its way down and banks get comfortable with it, then eventually, it could be June, it could be who knows the month. People are picking March, they're picking June, others are picking September of next year. You will get your cuts coming in because the economy will need that help to keep going. Here's what's not going to happen, a deep recession. I can't imagine with labor this strong any way that you get a deep recession unless from today's fundamentals things shift dramatically. That would do it, of course. But given what we have, looking at, as I even look today at the S&P Global, the PMIs on manufacturing and service sector, folks, they're too strong. That's not how you go into a recession, so not seeing it. In the platinum market, you're caught in a trading affair, but there's a lot of upside resistance up here. Got to be careful here. The auto business is difficult. We're seeing again more and more of the companies saying, in the United States, not saying this for China, the Netherlands, other countries where people are really committed to electric cars, we're not in America. It's a neat thing, but it ain't here. I was with a friend in Indiana yesterday, and he just bought a new Lexus. I go, what'd you get? You get a hybrid? Which one did you get? He says, no. He said, I live in this city in Indiana. I heard there are no charging stations. Where am I going? He goes, and if I want to take the car and take a ride to Indianapolis and all, I don't want to worry about where the stations are from here down there. That's the problem that is still here in America. So what we need, and you'll know you're on the right thing, it's not going out to a CVS, a Walgreens, and there's a charging station there. It's a charging station in every gas station. So instead of you just pulling for your gas, you're using their facility to go in and charge, and it's a quick charge. You're not there for 30 minutes. What are you going to do? Have their stale donuts? You know what I'm saying. We're not there. Dollar index, I am in the bear camp now. In order to prove me wrong, you're going to have to get back over these highs. So I can see that there'll be noise where you can get bounces, but I think that could be the opportunity maybe to be thinking the short side. But more about that in my subscriber videos. So to get them, it's really simple. The way, if you're not a subscriber yet, take advantage. The link is in this video. Or if you're on YouTube, it's on the right-hand side. And if you have a question, you're an existing subscriber, call your Ira Epstein person or call our sales office. They'll work with you. I'm Ira. You have yourself a great day, a great weekend, and I'll see you Monday morning. Take care.